say anything to your fans? You want to talk to the camera directly? This is Ari. Ari's he's a sweet guy. He's a nice guy.
Do you want money? I will give you money.
I do. Yeah, he's actually my mortgage broker, just so you know. That's my plug for him.
Call me.
Welcome.
Thank you.
But this is for you guys. Welcome to our very first podcast chat. This is a series that we're going to be doing for you guys. This is my good friend and one of our very best mortgage brokers that we know, who's extremely knowledgeable. But before I get into that, we're doing this for you. This is a podcast style discussion to give you the information that will be helpful for you in the future. So we're really excited to do this, but just remember that anytime you have a question, just send me an email or make a comment in the video and we can fire it off to Ari or myself and we can get you the questions that you want. Or if you have any suggestions of what you want to hear about in the future, just reach out and we'll set that up. But let's get started right now with Ari Ditkofsky. What's up, man? How you doing?
I'm doing good, man. Thanks for having me.
Looking sharp.
I tried.
Looking real sharp.
My wife helped me this morning.
Oh, so. She did?
Yeah.
Yeah, me too.
Of course she did.
We got you some croissants.
Thank you.
There's some lobsters.
Yeah, I'll bring some home.
Yeah, this is the coolest croissants I've ever seen in my life.
Yeah,
I'm very excited about the croissants. But what we're here to talk about is homes, buying homes, selling homes, and how important the finance world is. So I guess the first thing I wanted to ask you is, we're always talking about what is scary in the news.
Yes.
So the first thing I want to get into is, what are you excited about? Where is there hope in this world? What can people, think positively about when it comes to real estate? Because for a long time, before the last 2 months, it's been pretty positive.
Yes.
So what is good?
Well, I think what people really need to focus on and where they need to stay positive on is that real estate is a long-term thing. Okay, this is their home. This is the place that they should never think of like it's a stock. I know we've been living through incredible times where, rates have been at record lows and people have been watching real estate skyrocket, and almost it's created a dynamic shift psychologically for people where they're thinking, it's like a stock that they never want to get off and it's only going up. And I think where we should find hope is to go back to the basics of realizing that while Toronto real estate is obviously an incredible investment relative to the world, this is your home. This is the place you're going to enjoy the memories with your family or with your children. And this is not something that you should be thinking about or losing sleep over you need to flip the next day.
Right.
So yeah, the talk of the town is rates, and rates are going up, and we're definitely going to get into that. But I think people just need to relax and not worry about that so much. It's when you find the house, I always say to people, you're not buying a house to get a rate. You're getting a rate when you're ready to get a house.
Right.
And you'll get the best of that environment, whatever that environment has to offer based on your needs at that time.
Right. It is a house. There's, you need a roof. It's one of our physiological needs. Learned that in, I think, psychology, pretty sure. 101. I went to university. That's great. I mean, the whole rate discussion, I mean, we might as well get into it because I think you want to talk about rates, and I'm pretty sure you do, and you guys all want to talk about rates because it's like the biggest conversation that you guys want to know. What's happening with rates? What's happening with rates, man?
Yes. So the talk of the town is rates are going up. Okay.
Oh, they are.
Yes. They're going in, they've tended to be going in one direction, and I think they're going to continue on that course for a while. And what's the cause of that? What's making rates rise? For one, everybody's hearing about inflation. So what is inflation? I was asking a friend the other day, I said, do you know what inflation is? He said, yeah, the cost of things go up. And I said, well, that's one of the causes of inflation. That's what we identify inflation with. But realistically, inflation is literally the increase of the money supply and credit, which is what we've seen for God knows how many years. Record interest rates have been low. People have access to credit. People have access to loans. And the central banks have been flooding the economies with more and more money. The printing press has been on. So what happens as a result of that? More money means more people have access to spending money. The more people spend money, there's more competition for those products or for those assets. And as a result, those assets rise. So as we can imagine, real estate is one of those major assets that's just skyrocketed in one direction. What the governments need to be doing and what they've signaled they're going to continue doing is raise interest rates to try and calm the market down, because a lot of people are feeling that they can't afford a home, that they can't get into a house, and they need to do something about that. Right. So what is that going to be? That's going to be them raising interest rates to try and cool that off. And so interestingly enough, when the central banks do increase the interest rates, it's not really just about mortgages, it's about all credit, people's lines of credit, their business loans, their credit cards, these are all variable products. So when the Bank of Canada raises their rate, all those products are going up simultaneously, okay, on top of variable mortgages. So this is what's keeping people up at night, okay,
for sure.
when they hear about rates going up. But as I was just saying earlier, I don't, and this may sound odd for me being in the business I'm in, but I tell people, don't worry about rates. Because if you're on the market and you need to buy a house, you're not going to sit on the sidelines and watch the housing prices go up for years, praying that's going to come down.
Yep.
So what are you going to do? When you need to buy a house, you're going to buy a house. Yep. Okay? It's the same way if me and you were going to the cottage and, what's the point of me asking what's the weather this weekend? We're going.
Yeah.
I don't want to know what the weather is this weekend, because whatever it is, we're going to have a good time.
Yeah.
And that's how people should look at real estate.
Yeah.
You work with a good team, you put yourself in a comfortable financial position, and you just make sure that you're not biting off more than you can chew.
I mean, that's the big one. I mean, that's the big one. The whole biting off more than you can chew is something that you should definitely be worried about, because if you don't know your finances and you don't know what's coming in, what's going out, and you don't know what to expect in the future, and some things are up in the air and unknown, like that's a pretty significant thing that you need to be in touch with when you're making such a large commitment like this, because defaulting on your mortgage is not an option.
No, and it's certainly not something people want to do. So that's one of the major no-nos of pretty much anything, but I would specifically say in buying real estate, you got to know your stuff. And in our business, the purpose of our existence is to assist people with that, so they don't need to know their stuff. They have a team around them. They have an ecosystem that's ensuring that they know their stuff.
Yeah.
And that's one of the major pitfalls of the industry, is when people get ahead of their skis and they make a rash decision that they know what they can do, or they're overconfident that they make great income, and they just rush into something without even knowing how the mechanics of mortgage financing works and how their income type might be looked at from the bank's perspective. Right?
That's a big one. So I mean, you guys are coming out with me. We're looking for homes, or you're going to look for homes, or we have looked for homes. We're looking, you're about to buy, or you're thinking about buying. You and I are in contact all the time. Hey, what did this sell for? What did that sell for? Whatever it is. How much contact we have, you should be in contact with Ari just as much, because knowing what your finance situation is constantly changing. And you need to be in contact with him. I mean, obviously there's other mortgage brokers out there, but I just mean someone who is going to be able to explain things to you in a way that not only you can comprehend, but you can put into a spreadsheet and you can follow along.
Yeah, and it really is a team effort. Teamwork makes the dream work, right? And like the dream of owning home ownership, you need your team to make that work. So what are we talking about? Well, going back to even rates changing, this is a dynamic situation. When rates go up, that might affect the stress test. Somebody who was pre-qualified 3 months ago or 4 months ago, and your rate may be expiring for a rate hold. Well, guess what? That doesn't mean that you're going to get the same loan that you were going to get when we pre-qualified you 3 months ago, because rates are higher now.
Hold up. Okay, let's talk about this right now.
Okay.
You have a rate hold. You're about to buy a house. The closing date is questionably over that time in which you have a rate hold. What does that mean? What is that going to mean for people, and what does that mean now? I mean, banks were a little bit more lenient in the future. Are they still? What's going on with this rate hold? And what does it actually mean?
Good question. So rate holds are, in my view, right now, something that everybody should be doing. You got to be planning ahead. You can't just say, I'm going to buy a house, I think I'm qualified, and I'm going to go and get it, because rates are changing so quickly. And for your own benefit, you want to hold a rate. What does that mean, hold a rate? A bank is willing to hold a rate for you. If you're pre-qualified and you qualify for a certain amount of money, a bank is willing to pre-approve you and give you that rate for 120 days. Okay, so for 4 months. And that means that you can't come up with a deal. You can't show up at 119 days and say, we found our deal, we just bought a place. Yeah. You have to be closed on your property within 120 days. So you have to technically have your deal papered and signed and executed, a month before your 120 days are over. Okay, so you have time to close, do your appraisal, get all your conditions satisfied, get all the docs over to the bank. Relax is a nice thing to do before you close on your house. Some people could be a little stressed every now and then.
As soon as we get your deal done, we send you the agreement of purchase and sale, we send you the MLS listing, and we call Ari the exact same day.
Yes,
you get that shit done right away. You just get it done, and you don't wait a week because we don't know what the Bank of Canada is going to plan to. I mean, they're telling you what their plan is. They're telling all of us what their plan is, but we all know that there are some knee-jerk reactions, and sometimes they're not that well thought out.
Yes.
So it's like this is a pretty important thing that you need to understand. I'm sure a lot of you guys really know about this stuff, but it's just important to reiterate it and keep going along with it.
And it's better to be early if we're talking timing. Listen, it's my philosophy and everything. It's better to be early than to be late. And so, yes, as soon as you have your deal, you should be in communication with your team, your mortgage professional, and make sure that the wheels are in motion. Because for example, it's not just about whether you have your rate hold and you get the deal done in time and it's all good. Yeah. Well, there are things that could come up that you can't foresee. Some banks could be overwhelmed, and actually that's something that's happening right now. A lot of banks are overwhelmed with their deals. They don't have enough resources. They don't have enough people working. And there are some notices from certain banks. I'm not sending clients to these ones anymore at this point, but where they're saying it's 35-day turnaround time before they even let you know if you're approved. We're not going to wait for them. So this is also, I guess, taking us in a different direction, but this is sometimes where it's not always about rate. Sometimes clients are so preconditioned to say, what's the rate, where they think that's the only element of the mortgage that makes a difference to their life. They don't understand the other mechanics of a mortgage, amortization. What's more important to you? Are you trying to get to the lower payment per month? All these other things. And once you're talking about just rate, you may be losing sight of a lot of very valuable things.
Right. Absolutely. No, I'm not ignoring you. This is a part of the podcast that's going on. I just wanted to show this to you. Here, let me just show this to you. Look at these freaking croissants. Do you want to just take a quick bite? You want to take one?
I think I'll do the crab with the truffle.
This is very important.
Should we lean forward so we don't get the cheers? Do we wrap arms? No, let's just toast.
That's a little much here right now. Yeah.
Cheers. That's a damn good croissant.
To keep you guys engaged, because this is important stuff. A lot of people have made some money on their properties. Both in reality, they've made money in their lives, or they made money on their properties with appreciation. A lot of people want to give money to their kids. A lot of people want to buy investment properties. This whole refinancing part of the game, there's a lot to think about.
Yes.
This is something that I know that you've helped a lot of my clients with. And I know a lot of people are looking to, double down on Toronto real estate because there's only so much land and there's a lot more people coming to the country, and you either believe in Toronto real estate or you don't. If you do, then it would be a good thing to understand the back end of financing so we can leverage as much as we possibly can and turn that investment into a larger. There's a lot of potential here. How do we get this potential? I'm talking a lot. I just want to get him to talk. I just want to know, what are some of our options with regards to refinancing, and where do you see opportunities with the appreciation that we've seen so far?
So, I believe in Toronto real estate. There's no question. Coming from a background prior to my starting this business years ago, I had traveled all around the U.S. and sometimes we're so enamored with the United States, for example, that we think that there's all these major markets. But outside of those few major markets we know of, a lot of these cities are not really so spectacular. And then you come back to Toronto and you realize that we are a world-class city. And if people don't know that, you should know Toronto's a world-class city. And all the unrest that's happening around the world is only making it that much more desirable. Pandemics, wars, all these other things. And as bad as sometimes we could complain, and everybody does, and we think we may have it wrong, everybody wants to live here. So I think the demand is always going to be strong, okay? talking about refinance, people have done tremendously well with the equity growth in their properties. And a great way for people who have been investing in real estate to try to roll that over and get more real estate is to refinance. How are we talking about refinancing? Well, as long as you qualify, when I work with clients, what we're looking at is we're looking at income, we're looking at what other assets you have that are producing income, and we're measuring that up against your debts and the prospective property that you're looking to buy,
right.
Okay? Now, the new property you're looking to buy also as an investment is going to produce income, which, by the way, we can use to qualify us for that deal.
Right.
Now, when you're doing a refinance, you're taking money out of an existing property. Okay, you have a lot of equity there. So as long as we're qualified and we work out the whole big picture together, it's like a business plan. We're gonna say, okay, how much money do we need that we're trying to get out of property A, the one you own right now? Are we qualified for that mortgage? What does that look like? How much money can we get out of this and it will still carry itself and we're comfortable with the cash flow that it's producing there to manage its debts? 2, once we get that money out and we put it in this new property, can we qualify for a mortgage on the new property?
Right.
As long as this puzzle comes together, we know exactly what we're capable of buying, and a client can go in guns blazing and pick out the property that works for them.
Right. Yeah. So I mean, we're like, obviously we want cash flow. Like, you want more income than you have money going out. That's just the general. That's what I'm trying to help my investor clients do. But the way that they get serviced, like the way that they get the debt. That's up to you. I guess the biggest trouble that I think people are doing that people are experiencing right now is that they don't really have the education. So they're like, I know I want to invest in real estate. I've seen all my friends and family make money for like so many years, especially people who invested 60. My grandmother's 95 years old. She's
good.
Working still. She owns real estate that she is actively managing. Is she a certain kind of person who would be doing that? Yes, she controls a lot still, and she doesn't really want to give it up, which I love her for. She's just the best. If she ever watches this, you're the best.
Hi, Grandma.
But there's a new generation now of people that are looking for the next 70 years.
Right.
That want to get into it, and
as they should be for the long term.
For the long term.
Right.
So, I mean, what kinds of properties are we going to be, looking for to, like, what are the risks in larger kinds of properties that we're going to need to be watching out for? Because if we can't service that debt,
right,
like, it could be a problem.
So this is where there's a transition from residential to commercial, for example. So. This actually just happened. Somebody came to me, they heard about me through the grapevine. I didn't know this person, and they said, I have a client. It was a realtor. I have a client, and they did not know that the property they bought had 6 units. And because it's 6 units, it can't be considered residential. It's commercial. Okay? And they figured they were good to go. And they're closing this Friday. I got the call on Monday. They're closing this Friday. They don't have a mortgage. Yeah.
Are they closing this Friday?
That was like at 10 o'clock at night, by the way. So I'm taking the call at 10 o'clock at night on Monday, and I said, okay, so we have a problem, and let me see if there's something I could do to help them. But these are one of the things that people take for granted. Real estate is not real estate is not real estate. There's commercial, there's residential, and there's a slew of different variables that could come into play when trying to purchase them. So on the residential side, for example, we would be looking at income. What is the income that's being produced by the individual borrowing and by the properties? Once you start getting into commercial, it becomes a whole different ballgame. I mean, you want the properties to be able to cover, like they're going to be looking, commercial lenders, as does the cash flow of this property cover the loan? They have certain standards they're looking at. It's not just about, hey, I have 20%, so I can borrow from a bank, which is a big misunderstanding that people have coming into mortgage financing. I put away 20% and now I'm good for 80%. I mean, they're forgetting the one big item here, which is income. Like, okay, can you afford the 80%?
Does it service the debt?
Yeah.
And potential other issues like capital expenses, like a new roof or whatever. Like there's a lot of expenses that are going to come up in time.
But if we're talking about residential, which a lot of the deals we do, residential people wanting to buy a duplex or a triplex, or they're going to live in one, they're going to rent the other, or they're just going to buy 3 units, something like that, for example. If we're just sticking residential, I think one of the things that people also need to realize is for that you can get a residential loan. It's not looked at that the bank is going to say, is this cash flow positive? They're going to look at you as the borrower and see, or whoever, how many borrowers are on the deal. Does this deal qualify based on your income and based on some other variables? Now, what people should be thinking about if you're investing in Toronto real estate is, does it need to cash flow? Is this a great asset that I know, like you said, for the long term? Like if I'm buying in this area, do I know that in 20 years from now, this is going to be even more desirable or still one of the best areas? And if the answer is yes, you're not really worried if the rent you're getting doesn't cover the mortgage plus the overhead cost of the property. A lot of times the smartest investors I know could be feeding it by a few $100 a month. But if I were to come to you with a business proposal and said, Russell, I'm going to partner with you on this croissant, okay? And guess what, Russell? I, as the croissant borrower, as the croissant tenant, I'm going to pay for 90% of that croissant, but you're going to own 100% of it, and you'll just kick in 10% over time.
Okay.
You'll do that deal 100% of the time.
Yeah.
Right? So the way people need to look at it is somebody else helping you acquire this great asset, and if you have to feed it a little bit of money, so what? You're not spending the money. You're acquiring an asset, and almost like a forced savings account, you are just taking a little bit out of your right pocket and put it into a left, into a growing asset that's going to be there for generations to give to your kids or for whatever you may be doing, if it's producing cash flow or whatnot. But you don't look at it like you're buying a croissant.
Yeah.
Okay, because the croissant I'm going to eat and it's going to be gone.
It's gone.
That money's on fire.
Yeah.
But your real estate's going to be there. It's going to be producing even higher rents in the future. It's going to be worth a hell of a lot more.
Yeah.
And that's how you have to go into real estate investing.
Yeah.
Now, if you're lucky enough to find something that's producing incredible cash flow above and beyond your mortgage and all the other overhead of the property, then some people are lucky enough to find those diamonds in the rough. But more often than not, you find a good piece of real estate that you like, that you can successfully finance, and if you're comfortable with it every month, that's it. Just keep on trucking.
Definitely, and we're seeing less and less developers, less and less people buying homes that they knock down and that they're going to build for themselves, because building costs are so crazy and expensive. So finding properties that are turnkey or relatively turnkey, you can do some cosmetic changes, and maybe it doesn't cash flow. That's okay. It's fine. It's just over time that as you grow your equity in that property, and you're paying for that equity, or the actual income from the property is paying for that equity, as you gain more equity, eventually it does become cash flow positive. Right. And over years, it starts really gaining cash, and then you have yourself
and then you
income,
refinance,
and then you
by
refinance.
The way, and that's what a lot of real estate investors do. Right.
So let's actually talk about that. Let's get into this. So how does that work? So we just buy Croissant A, or we buy a property. Okay, we've owned it for 5 years now. Okay. Now it's going cash flow positive. We've increased we've appreciated about 5 to 7% a year, which is what you should be expecting for the 50-year average in Toronto. We've appreciated over those years. So now we own a much larger asset. I want to parlay it to the next one. How does that look? Is it just personally qualifying, or am I have to create a whole new corporation? How does it work?
Well, it's both. So if we're talking about you bought house A, okay, and we're talking over time, it's already grown in value. The mortgage has shrunk as a result. So a lot of times people aren't thinking about these. So multiple things are happening. Over time, your asset has grown in value. So you've built equity just over time, okay? At the same time, you're burning the candle on both ends, because over that period of time, you've also been paying down the debt. So you're doubling your growth in a way. Not necessarily doubling, but you're having significant growth coming from both ends. And then as well, usually the way the laws work, notwithstanding COVID, you are able to increase rents every year. So your income is also growing every year. Now, after a certain period of time, you look back and you say, hey, I got all this equity here. I got this valuable asset. The banks like the real estate. You have equity there, meaning there's value there that you can borrow against. And yes, the bank is going to look at the covenants on the application. They're going to say, okay, Russell, how much do you make? If you have a partner, how much do they make? Okay, what are your debts? And then what is the income, which we're going to add to your income? on the application from this real estate. And just like anything else, as long as there are certain ratios that we look at in our softwares and that the banks are going to look at, and as long as the ratios are in line, the bank is going to do the deal. That's my job to look at it and say to you or somebody else, hey, look, we're above the line here. We may need to ask for less, or you may need to put down more money.
Yeah.
Or, my favorite, I ask the bank for an exception and they do the deal. Hopefully. So basically, if you are looking to invest in real estate, you need to be in contact with your mortgage broker all the time. You need to understand the many different potential things that could come up in the future that could affect your ability to service that debt or the property for service that debt. And also, where are the opportunities? How can you further leverage yourself, this current situation you're in, to put yourself at a much further level, take advantage of the situation that we're in, where we're making money on not only the money that we put in, but also the money that, like, I own 20% of the home. There's the other 80%. The increase of the property has gone up. The increase of my 20% has gone up, but also the other 80%. Correct.
So it's just how our economy is built, and it's important to understand that, yeah, we're playing a bit of a game here. It's a game, but know the game, understand it, and you'll put yourself ahead. I really want to I want to know. This is kind of just a fun thing I'm thinking about. Mm-hmm. What's the time that you can remember, or a couple times you can remember, where stuff was really going to hit the fan, shit was going to hit the fan, and you stepped in, and your job made the biggest difference in someone's purchase?
Mm-hmm. Okay, so I have probably two quick stories. The first that comes to mind was, it was on a weekend. It was a Saturday. I was driving up to my in-laws' cottage in Muskoka. I'm in the car, and I get a call from a realtor saying, Ari, I have a client. She's closing in, I believe it was 11 days, and her mortgage still hasn't been approved. And this client wasn't working with me. I had no idea about this person, but I said, okay, put them on the phone with me right now while I'm in the car. And
kids screaming in the back.
I'm prefacing this being I'm on my way to Muskoka,
Yeah.
Put me on the phone with them. Let me see what I can do. I speak to this really sweet girl, and she, obviously this is a first purchase for her. She doesn't understand what's happening. She was working with there was another mortgage broker. I don't really understand what they were doing, but they did not follow through and stay on top of their stuff for this person. So here she is, 11 days away from closing. Now, typically, just FYI, banks want your file to be closed 2 weeks before closing. That's their preference, okay? Now, sure, there's exceptions, but they always say that, they reserve the right. Things could go bad if you don't get it done, all the conditions satisfied 2 weeks before closing.
Okay.
Now, here's a client coming to me 11 days before they're closing, and we're starting from scratch. Okay, we already should have been complete. So I basically give this girl a rundown of what we're going to do. I say, look, I'm on my way to Muskoka. I'm going to be on my computer when I get there in 40 minutes. I got an understanding of what her situation was. I said, get me all these docs right now via email. By the time I got to the cottage, she had already emailed me everything. We spent the next 3 hours going back and forth for me polishing up her file. And then I basically begged my contacts at the bank to review the file. Now, that's one of the benefits you have in my industry. If you're doing a lot of volume and you're working with a bank and all your deals are good quality deals, a bank is going to work with you. These are relationships, right? They're going to say, Ari, of course, so let me look at this for you. So I sent it off immediately that same day, which was on a Saturday, so the bank wasn't open. But come Monday, they came back to me. They did a quick appraisal, and within 3 days, so what was it, on Wednesday, we got approved and I got that deal done. And that was the first thing that comes to mind for me in terms of a record under the gun for a client who was really sweet and undeservingly put in a bad situation. So
just swooped in to rescue. You're the hero.
Yes, that was a good one.
Actually, I think we talked about this before. If you guys have watched a previous conversation that Ari and I had, is the difference between a mortgage broker, someone who, you're going to explain the difference, but someone who works for the bank and someone who is a mortgage broker. What's the difference? Why is it important for you to know the difference? And just if you can just explain that to people, because I think a lot of people don't really understand what your job really is and why it's different from someone who works at the bank.
Yes, and I actually I'm glad you asked that, because obviously it's something I'm passionate about, and it is the biggest misunderstanding that people have, and they just don't know. So what's the difference between a mortgage professional and the bank, okay? So banking is one of the oldest industries in the book, money lending, credit, all these things. They know their business, they know what drives their customers. And psychologically, let's be honest, every single person, when you're thinking about a mortgage, the first thought you have is, I'm gonna go to my bank. Why? Because I'm a valued client of my bank. I have my credit cards, I have my savings account and my checking account, or a lot of the clients I deal with, and I know that you do what they could say, I'm private banking, I'm private wealth, and I'm really important to my bank, okay? This is a narrative that we create for ourselves to the benefit of the bank, okay? The bank obviously they love to play that up, but they actually don't care. For them, if a bank really has your back or has your back or your back, the truth of the matter is do you think your bank is ever going to call you and say, hey, Russell, it's time for you to leave. We're looking at your mortgage, and we heard about this deal being offered by another bank right now while you're under contract. It's time for you to break your contract. Yeah, you'll eat a penalty for $6,000, but you're going to save $32,000 if you leave our bank today and go to this other bank over the next 3 years of your mortgage. Of course not. Right? The bank never calls you. As long as you're making your monthly payment and making no noise, you never hear from them until renewal. What a lot of people don't understand is that this is where you lose money. And ironically, going into a mortgage, the only thing they're thinking about, as I was saying earlier, is rate, is how they associate as saving money, right? Because they don't understand how it works. So the bank doesn't provide you that service, okay? They're never gonna call you. They're only in the interest of selling you their product. They're in the business of selling banking products, and only their banking products. So what is my job as a mortgage professional? My job as a mortgage professional is kind of like a sports agent. I am Ari Maguire. I am the guy who looks out for my Cuba Gooding, okay? And at the end of the day,
show me the money.
I don't get paid by the bank. I'm not on their payroll. I mean, I do get paid by the bank eventually. They give me a finder's fee. But I think this is important that people understand how a mortgage broker makes their money, okay?
Yeah, please tell us.
And I think it's very important for people to be transparent, because a lot of times this misunderstanding or lack of information is what creates confusion. Where you have confusion, you have people who make bad decisions because they just didn't know what to do. So how do we make our money? Okay, when I do a deal for a client, the bank's never paying me. Okay, I get to understand what my client wants. Whether we need a 25-year amortization, a 30M, are we going for a fixed, are we going for a variable? Through our conversations, we're going to unearth, and a lot of time the client doesn't understand what they even need yet. So I'm gonna get that out of them, and I'm gonna educate them on the mechanics of a mortgage and help them figure that out. By the time we're done, they're gonna know mortgages inside and out, they're gonna know what product works for them, and then when we know what product we're looking for on the market, then I will educate them as to who is in the lead at that point in time. Now that bank who is in the lead at that point in time is just lucky. They are lucky to have the right product, be in the right place at the right time for my client who needs that product.
Right.
That's it. So then I will educate the client and we will send the deal to that bank. Now that bank who has a bloated balance sheet, who has tons of overhead, who's paying employees every single day, who's paying to keep the lights on, who's paying for all the printer ink, they're gonna give me a finder's fee because I just package them a deal and they don't pay me anything throughout the year. I just said, look, here's a client who conforms, here's all the work done up front, here's all the paperwork that you're gonna require, and I make the bank's life easier. I also make the client's life supremely easier.
Yeah.
So that bank is lucky. They're gonna give me a finder's fee, okay? Now that finder's fee is not an additional fee to the client. As I'm sure everybody knows, banks make a lot of money over the lifetime of a mortgage. So they're sacrificing a piece of their future earnings to pay me out a finder's fee. You're paying your deal no matter what, you're paying your mortgage, but they're gonna pay me a finder's fee. So everybody should have a mortgage broker. It costs them nothing.
Yeah.
To have that mortgage broker, there's no cost. And to have somebody who's gonna be taking your calls till midnight or on the weekend, private banking, I personally bank with private banking. Guess what? They don't give me their cell phone and they don't take my calls after 5.
Yeah, that's right.
Okay? So as much as we tell ourselves how important we are, if you want to have the highest level of a relationship that you can text on the weekend and call and say, hey, I really want to do some planning at 11 o'clock at night. Are you willing to burn the midnight oil? Yeah, it's a real relationship with a real agent. Like I said, it's a real thing. And so I'm looking out for the client to say, okay, Russell, how are we going to achieve your goal genuinely? A bank is going to achieve your goal so far as they can sell you a product. If they can't sell you a product, they're not interested in helping you figure out your financial goals elsewhere, right? So when it comes to refinancing, breaking out of your mortgage, moving you to another bank that could save you money, that's my job, okay? A bank is a financial institution that has your name and number if you bank with them, and they're willing to sell you their product. That's the difference.
I just got a great analogy out of it. It's like you go into the racetrack and you go and you don't know the horses, but you're going to do all this research, you're going to read all the write-up, you're going to pick a horse right at the beginning of the race, and then, hopefully they win. But if you go to the racetrack and like Ari's like, hey, I'm going to let them like all run around the corner, and like as they get around the corner, we're just going to pick the one that's like for sure going to win.
I feel like you just made me be like the doctor who's like injecting the horse in the knee kind of thing.
No.
No,
you just have seen it run half the race. So
Yes.
you're like, I know this is going to finish. This is going to finish in first.
I'm the compulsive gambler that lives at the course, and like
Okay,
I will tell you which
I'd
one.
maybe paint you in a bad light, but you could just have another.
I'm
You
probably
want another
going
one?
to.
No, yeah, okay.
in
Well,
my
then we'll have it
shame,
after. Yeah, no, I mean, look, we don't want you guys to be watching for too long. I think that it's like it's a very this is an important topic, and I think you guys should probably reach out to me if there are other things that you want to know about about your mortgage, about refinancing, about investing in the future, about how to plan, because that's ultimately what it comes down to. How to plan not just for this house, but maybe you want to buy a bigger house in the future. Or maybe you want to downsize and you want to give some of the money to your kids. Or whatever it is that you're looking to do, reach out to us, ask us the questions. We're here to give you the answers, and that's the purpose of this right now. So thank you so much for watching. Thank you for coming.
Thank you for having me.
I mean, thanks for making
And
this all
feeding me.
happen. Yeah,
Yes.
There you go. And we'll keep doing this. So, thanks for coming, man. Yeah,
Pleasure, buddy.
yeah. Thanks for watching.